Cool. We're recording. What's today's date? May 16th. Damn, it's already May 16th. Wow. Cool. So nothing really happened, right, between the Wednesday closure and then Thursday and Friday. As you can see, pretty much indecision. But something I'm scared of now. Well, I mean, I'm not even scared of it at this point, to be honest. I just want to see this move, like we said before. But something to be attentive of was obviously that open, right, of the SC that took out previous liquidity there, right? And we bounced, gave an engulfing, even gave a pullback during Wednesday. And if we're looking at this from an intraday point, like it's looking stupid corrective, but my issue now is the fact that just playing out structure, right? This is the previous low. This is the bounce of the SC, the daily SC, right? And from there, we just gave a reaction that essentially broke structure and also gave a higher low. That higher low led to now that higher high being taken. So looking at it from these time frames, right? And just from here, I can see that this is potentially an inefficiency fill here. So let's see if we can find the time frame where that shows. Yeah, so as you can see, let's delete this stuff. So as we can see, right, the final push on Friday, was it? Yes, Friday. Yeah, yesterday was the inefficiency fill. Right, that inefficiency fill there that is not pushing up and is not essentially maybe pulling back, but this looks like it wants to be bullish 100%. Just looking at this from intraday basis, right, all this downside move was, what it seems like to me, was just a grab to fill this inefficiency point here and gave a reaction. We now gave a reaction that's pretty much 95% of the previous move here. So this looks like, that looks so ugly, but yeah, you can see it. Yeah, those are ugly doodles, but like just looking at structure here, right? Obviously you would want to see this dip lower. Like I want to see this at least dip. Oh, that's annoying. Obviously to anywhere in here, since if we're looking at premium discount, right, we want at least equilibrium. But I mean, at this point, I just want to see this move. Like I said, like at this point, like I want to see just a pop in whatever direction it wants to go. Just because once you see a pop, you know, we capitalize on the pullbacks, right? Like as you can see, daily DXY has looked pretty much like a fat range over the past, month and a half, pretty much almost 2 months now, right? Pretty much been ranging. So I just want to see this pop, all right? Whether it's either gonna, it's going to either pop, catch something, and then go the other side, or whether it's gonna pop, take out highs, and then we look for the pullback to then continue higher. Either way, it's like moves will present themselves as long as we get an initial push. And the narrative that I'm seeing now is just like, we're mitigating from SC, right? We're now potentially heading for this previous high, which would be the next immediate target. We saw optimism for selling potential here, right? But obviously the next daily closure, as you can see, is pretty bullish. So this looks like it wants to continue, right? So a lot of people are right here. They're in that ideology where it's, 1 drive, 2 drive, 3 drive, 4 drive, sell. That's pretty much the ideology you're seeing right now. But just based off the narrative that I'm seeing, which is the daily, this could potentially fly. All right. So it's good to note, right? That's why I pretty much, this is the most marked chart that I have, is a daily chart, just because I like to see my swing potentials from these time frames, right? Because obviously if we would have cut a sell on EU here, right, that would have been up here, I believe, unless I'm doing that wrong. 8th of May. No, actually, we got a better. Okay, yeah. So that's just, it's not equal, but let's see. All right, but when correlating these two, you can see obviously that from the DXY daily, we're saying that this is the narrative based off of that. And then looking at Euro, it's like we're gonna pretty much cover this range. Right? We look at the range equilibrium, and the price is continuously showing us that it wants to push lower due to the reactions that we're seeing from equilibrium, right? Not necessarily because of the equilibrium, but we're using the logic of what equilibrium means, right? So since we're closing below it and we're showing rejection to the downside, it's like this could potentially just roll over. And that's fine. Like I said, I want to see this move, you know? That's what I care about. And to support that, it's why I took my sell position on Friday, right? Although it might not fully work, it looks like it really wants to, right? So obviously that one POI, where is it? I mean, not the POI, the time, right? 7 a.m., 10 a.m., that's Killzone. And right off the bat, I'm going to show you, this is the POI that we used. Right, pretty textbook, 50% inefficiency. And as you can see, right, 50% top. This is the open of New York. This is the closure of London. So it happened right in between that range. All right, so now we got to see what happened during this range. So something to note during this time of pretty much how this is going, the time of when this happened, it's like, for one, we're always paying attention to structure, right? And as we can see here, this was the initial, right? This is London's high, not London's high, but this is like pretty much the first formed high of New York, right? And this happened right at around an hour deep, pretty much. But notice that this would have been pretty much a trap for anybody of any type of trading. Like, look, we have high volume, and then it pretty much unsupports itself here. All right, so as you can see, it's pretty much unsupported. So the peak in volume is here, and this is where the diminishment is shown, right? Diminishment bullish volume, but bullish volume is fully continuing. And then people would have probably tried to sell this. They would have tried to sell this candle, right? Maybe 5 pip, 8 pip, 7 pip. Yeah, 7 pip, right? But the reason why we wouldn't have taken that, and it's right, it's one of the main rules that's on the psychology aspect of my trading plan. It's one of the biggest rules that I've told you guys. It's pretty much, don't take a trade unless something reacts from your POI. So we know our POI is up here. So why would we be wanting to take the trade down here, right? Because for one, we're risking a loss, and two, it's like, why not just be patient, right? This is something that I learned the hard way through weeks of doing the same thing. Is like, I would try to take every single opportunity until I realized that I should only be waiting for the POI and then seeing what happens in the POI. So even though here is pretty much the peak of volume, and it gave us technically a setup based off technicals, we know that we will only take it if it comes into our sell zone. right? So if we're looking at this from the M1, right, we already saw that it rejected or reacted from the 50% of the inefficiency right here. So, right, for the people that don't have the seconds time frames, that's cool, right? You can easily use the whole candle, and it's okay. I'll check your comment in a bit. Let me just finish this really quick. All right, so the position would have been, it would have got 1 to 2 pip drawdown, even though it only would have been in seconds. And then it would have been at break even, but your stop would have been pretty much a 3.5 pip stop, right? And this is for the people that don't have the seconds time frames, right? So I'm going to go in depth on this, but I'm just showing you how you would have potentially played it. So when we're dealing with this too, right, we know that we want the reaction before we get, so we can catch the pullback to then catch the real move, correct? So we also have to consider Wyckoff logic, effort logic. So notice here, right, this could be considered your preliminary supply due to the fact that I don't know if that's considered a, no, it didn't even tap the open, right? So as you can see, it didn't tap the open. And then after that is when we got the full rally, right? Notice that this volume is extremely low for the momentum that's happening. So I'm already in the assumption, oh cool, price is seemingly weak. So I'm trying to capitalize on not this trade, right? I mean, I'm going to take both or either one that I can catch. But if you're trying to be conservative and you're looking to essentially increase win rate, right? You wait for the reaction. You see that that reaction occurred and that this reaction from the 50% was on unsupported volume. So now you want to take a potential SC inefficiency play down there. And like I said, 3.5 pip stop, and then that's your trade. So let's see. 3, you could have even probably done 3. Nah, yeah, 3.5 is fine. And then from there, obviously your first target is down here. Previous structure. Already 7 to 1. There it goes. Cool. So 7 to 1, that would have been your intraday target, right? But the only confusing part here would have been the fact that this technically broke structure all over there. So the second target would have either been previous structure, which is here, or you would have just held knowing that you're potentially catching, you know, the bullish, I mean, the swing bias, right? Because for all we know, this can just melt due to the other factors that we have already spoken about. But yeah, so I went ahead and I went to the 15-second time frame during that same spot, right? And this was the only thing that made sense to me. So this isn't even a concept that I like use or show, but it's the only thing that made sense. It's pretty much the gap between, you know, your candles here. But this is weird because this is a pretty much a jump, and then it automatically came all the way back. So if we're thinking SC logic, right? Maybe this happened in actual microseconds that we can't even fathom or understand or even see. So just based off of that assumption, I'm going to mark that out as a POI. And as you can see, that would have worked. So would I have taken it in that manner? No, 100% no, because it's not something that I fully know or understand, right? But you can always pretty much benefit from knowing why stuff happens. And that's the entire point of this, you know, this singular chart. However, here, this is where it actually makes more sense. So cool. So we see, right, preliminary supply, right, showing pretty much indecision, which leads to baiting out sellers, pretty much preliminary supply. Then your buying climax occurs, right? Notice that in between the buying climax and the up thrust, that's when your maximum level of volume is, right? So we didn't get an SOW, as you can see, structure held there, but the rally up gave us the LPSY for this, and then we got the reaction. But now this is the interesting part. This is where you would have potentially caught the trade. So you see the diminishment in volume, but you see the increase in price, right? And the reason why I'm using this candle is if we go to the 15-second once again, right? No, that's this candle here. Notice that candle there. That candle is the candle that pretty much reached for whatever it was up here and then reacted, right? So I'm pretty much disregarding that candle. However, that candle is inside that candle. So on the 30-second, you see that we use this entire candle. All right, so that's pretty much a simple example of me showing you that, you know, the logic is what matters, right? That doesn't technically look like an SC due to the amount of wick, but I understand the logic behind what an SC is and how it works. So as you can see, it works out. And LPSY, from there, we get the breakup structure here. And we now have pretty much corrective nature and price, which pretty much signifies that they're trying to induce people to think this is a bull flag to then go up. However, as you can see, since our cycle is now complete, price will drop. All right, so I hope that makes sense. But that's pretty much the rant for today. That was, let's see, that was yeah, so the trade itself is about 8-1 right now. And yeah, so let's see your questions. When you're setting these low stops, the spread ever become an issue? It depends on what broker I'm using. If I'm using IC markets, no. But if I'm using others, yes. Because like the cool thing about a lot of brokers is, especially for me, for USD, majority of brokers won't have anything above a 1 pip spread, especially during New York hours. Maybe during other times, yeah. I mean, I wouldn't know. I don't trade those times. But let's see. How did you know what sell zone? I mean, this is originally derived from this. Don't forget that it was derived from that. Right, all the smaller time frame stuff, that was just meant to pretty much show you how to break that down, but it originally came from that POI. But yeah, you got to include spread. It just depends on your broker. I mean, if you can get access to like an IC Markets or Pepperstone account, then you're perfect. You're fine. But, or if you can get access to an Islamic account, then you're fine. But outside of that, it's going to be really tough. You have to include spread. Let's see. Does IC Markets spread? Do you take a fixed percent? Yeah, bro. I usually aim for like 30%. Because look, well, it really varies, bro. It varies. It varies based on you and your account balance. Like, let's say I took this trade, right? And I want to, and my first target, I'll show you an example. So my first target was here. My position was, let's say, fuck, where was it? Let's say we took the conservative position here. So my position is there, right? It's like 3.5, right? So let's say we'll do two perspectives, and let's see. All right, so 7-to-1 first target. Cool. Let's say this isn't the full target, but you want to take X amount off. So let's see. So it'll vary, and let me explain how it'll vary. It's pretty much so it's based off of you and account balance, correct? So let's do two perspectives. Let's do the perspective of somebody with a $1,000 account. Let's do somebody with the perspective of a $10,000 account. Or actually, no. Let's do 1,000 and 100,000. Let's do 1,000 account balance. Oh, let's do actually. Let me do 5, and then I'll do 100,000 account balance. So let's say we're doing, in theory, I wouldn't be doing this on a 100K account, but let's just say we're doing a 1% risk. All right, so 1% risk equals $50. Right? Am I wrong there? No, I'm right.
Oh, you're right.
Yeah, I'm right. And then let's say here 1% risk equals 100. No, am I tripping? No, it's 1,000. Damn, what the fuck? I'm in school and I can't even do fucking math. But yeah, anyways, let's say I risk 1%, right? That's $50. $50 here on a 3-pip stop, on a 3.5 pip stop. So in theory, this lot size will be $50. That means, let me do the math real quick. $50 divided by 3.5. That means each pip is $14. So that's a 1.4 lot. 1.43. I think, I'm pretty sure. Yeah, 1.43 lot. And here, this is a $1,000 divided by 3.5. 285.7. That's 28.6. Yeah, 20. I hope I'm right. 28.6 lots. So, in theory, right, for the $5,000 account, for the $5,000 account, I will pretty much be up 1.43. I'll be up 7%, 7.11%. So 7.11 times 50, you're pretty much up $355.50. Whereas here, you're up 7% times 1,000. You're up 7,110. So me, when I'm thinking long-term growth, I'm gonna set a specific, pretty much risk. How do I say it? Like I'm taking out a specific amount of risk. So for the $100,000 account, I will gladly take out 50% after the first target, because that's 3K in the bag, and I'm still holding 14 lots. So I'm thinking in terms, not in terms of greed, but I'm thinking in terms of logic. So I'm good with making $3,000 out of that single trade, and then just holding, and then just pretty much letting the rest run. Whereas for here, I would only take away anywhere from 20 to 30% of position. Now you're gonna ask me, why am I doing that? And my reasoning for only taking 20 to 30% is because my objective is to take that 5,000 to 6 figures at least, right? So when I'm thinking of having a $100,000 account, I'm like, yo, I'm living off of this money. But whereas if I was trading $5,000, I'm like, yo, this $5,000 is not going to be my main source of income. So I'm going to work on trying to pretty much get myself to my goal, which is 100 figures. Whereas if I'm trading 6 figures, I'm already in the mindset of, yo, like I'm probably going to use this money to live off of. So let me be smart about it. Let me take money off the table, but I'll still hold enough to where it'll follow my plan. Right. So it just really depends on you. 100 figures. Yeah, whatever. Fuck y'all. But yeah, it's just like 100. What y'all are, man, fuck y'all. You know, I'm trying to get the point here. Fuck. But yeah, it's pretty much like, it really just depends on you, bro. It really depends on you. Like me, if I'm trading the $5,000 account, I'm gonna take less because I have goals of reaching 6 figures, 7 figures, 8 figures. But if I'm already at 100,000, right, then I already know that I know what I'm doing. So I'm going to take out half of the position, right, and only hold no anywhere from 30 to 50% of the position, because that's still a lot of volume, right? 30 to 50%, that's like probably like 9 lots to 15 lots, anywhere in between there. And holding 10 lots on 100 pips, fuck me, that's a lot of bread, you know? But since you have such a bigger account size, it's so much easier to manage. And it's so much easier to take money off the table. Which is why your objective should be to master, you know, a specific risk management. And by risk management, I mean knowing how much to put into the market, but also knowing how much to take out and knowing when to take out. Which is why it's perfect to learn this stuff when you're trading the small funds, because eventually you will get that opportunity to trade bigger funds, whether it's you growing your account or whether it's you finding an investor or just anything like that. Ever have trouble getting orders filled on bigger lots? Yeah. So my entries would skip when I would drop anything above a 5, which is why I'm like, I kind of started looking away from CoinEx. Like after 5 lots, it would like pretty much skip my position like a pip and a half, you know? And for me, that's like 2% on account, you know? So I was like, I would freak out. It's like, what the fuck? Like, so yeah, I pretty much forced myself to move brokers and not use CoinEx on that much volume. Oh yeah, you can take profit way before that, bro. Like, look, if we're up $7,000 in an hour, you know, fuck, take like here, you're already up 6%, and it's only been 30 minutes. So if you feel like if in 30 minutes you're up 6% and you want to take half of it, go for it, bro. Like here's the point. My point here is you have to figure out what works for you, and that's the entire point of, you know, this curriculum itself. It's not for you to copy how I trade; it's for you to figure it out. Which makes it harder, right? But in the end, it's going to be so much more beneficial. Damn, I did not expect to go on that long of a rant today. Partial salary, everything extra is your bonus. How I think about it. Nice, nice. I like that. You just got to find what works for you, period. Yeah. But yeah, I mean, that's pretty much the discussion for today. How's the GA swing? I haven't checked it. I don't like checking it. Oh, if that continues, if that tanks, like I really want it to tank because I'm going to, like, it looks like it wants to, and if it breaks this low here or even this low, like I'll make a pair breakdown for you on like why I caught this entire move. And I could have caught this move, it just wasn't in my trading hours. And it's not even my pair, so it's like I don't want to venture out into stuff that I'm not fully aware of. So if we reach here, that's the 2000 pip mark. We reach here, that's the 2050 mark. So if he reaches there, then I'll make a pair breakdown for you guys for sure. When you put off the 0 and 50% of a season efficiency, you split your risk. I mean, you could. I don't like to do that because then my spreads are fat. I mean, my stop loss is fat. which is why either I'm gonna take it as soon as it hits the POI, or I'm gonna wait for the reaction. It just depends on the time of day and just how price behavior is at the time. Do you prefer USD pairs? Yeah, I mean, because I can trade London. And why does Sergio hate them? Because he's weird. Yeah, he's weird. I was gonna show you guys something. I forgot what I was gonna show you. I was gonna talk about something, but I forgot. Serge got in catalog. Yeah, because I gave him that distribution last year. He's been talking about that same distribution play for like 7 months. Like, let's look at it. Even though it's not the prettiest. It's just like I told him, like, he sold it here, somewhere up here, and I told him to hold it. I'm like, bro, hold that shit, like, for sure, like, trust. And he did, and then look, he's making bread. So, but yeah, this is that. Yeah, like, I still even have it marked out, I think. Yeah. So when we're just thinking of this, when we're thinking of moves like this, bro, these are moves that take super long to happen. But once it happened, bro, that's a fat bread, you know? Like, this can easily tank over the next quarter or two. This can easily tank another 1,000 pips easily. And you don't need to hold one swing through there. You can literally just take intraday plays knowing the higher time frame bias, right? Like, a good example of something like this, where it's like preliminary supply, buying climax, secondary test, up thrust. Even though the up thrust didn't take out the buying climax, that's fine. It still serves the purpose as a placeholder. Then we go to UTAD, essentially a test here. I don't know if I want to consider that a test, but since we're dealing with higher time frames, I do want to consider it a test. So this would be our test, right? And then the first SOW breaker structure, LPSY, second breaker structure, SOW2, LPS, SOW3. So now I'm just looking to seeing this do this and then just tank. All right. So I mean, you can see it. You can see it right now that it wants to be stupid. You see how it wants to be stupid? Like, that's literally what happened here, right? See how it wants to be stupid and then wants to incline buyers? Nope. That's when you sell it. And I'm pretty sure if I dive into like the second time frames, I'll find like a redistribution in here. But yeah, it's all logic, bro. It's like he understands that this is distribution. It potentially is, unless obviously you break structure point, which is like here or here, right? Or if you break any of these lows down here, if price comes back here and then it comes back and it takes out this high, then that's invalidated, you know, and then this will pretty much moon. But he's going off of that higher time frame. And like another example of something like this that took months, years to happen, right? And then they caught it and then it just exploded was this. Like, look, this has been happening for 6 years. Well, yeah, 5 to 6 years, this entire move has been happening, just like this one. Right, this accumulation, and now look at it going. It's gonna keep going I think it's gonna go on forever, to be honest. But it's just like, look, the potential here, it took from 2013, 2012, 2013 to 2019-ish, 6 years for it to accumulate. And now it's just pretty much hit the blue button for the next 2 to 3 years and you'll make money, you know? Yeah, like this isn't even technically an accumulation. It's technically like a reaccumulation. Technically, the accumulation should have happened back here years ago. Let's see if we can see that. Yeah, so you can see it here. Right, so pretty much range, right? Induce sellers, rally up, consider this entire thing an accumulation, right? Now, all this was here was a reaccumulation to then go higher. So in theory, we can see another move like this. In theory, obviously. right? So a good projection would be 27 to 3,000 long term. Or if you even want to cut it here, right? That at least takes out the previous high, and this is only at 2,300. But it's just like, the potential is there, and if we would have gotten in, if we would have known this, and imagine getting in 2018, 2019, right? Imagine running a standard, or like even yeah, like a standard, right? That's already 6,000 pips, $60,000. It would have taken a couple months, but that's fine because this is an investment, and investment is all about the long run. ROI. Yeah, so you see, it's cool. But yeah, I'm pretty much done for today. Unless you guys want to talk about other things. I want to start. I think I'm gonna start doing OBS for the recordings of the Zooms, just so I can include like the group chat and stuff like that. Because I'm pretty sure people rewatch these and they're like, "Yo, what the fuck is he saying? Like, what are you talking about?" But it's actually like something from the comments. But so yeah, I'm gonna starting next webinar. I'm probably gonna start using OBS because you guys can't see the Zoom screen. I mean, the Zoom group chat screen. But yeah, guys, do you guys have any questions? Yeah, I think we're good there. Let me see.